Hello, it's Tuesday afternoon, 3 p.m. We got it. We got it. This time, we're going to talk about important things that need to be done from today to the end of this year, 12 days left. And then we're also going to cover the first quarter of the due days. We always look ahead, so we want to know what's going on. Let's just get going with our webinar today, folks. I'm excited because I want to get this done so I can get on more tax planning meetings. I have so many meetings these days to plan taxes for our client. So time is of a real shortage. So we will make this very quick. What you're seeing right now, folks, is the website. You know, you can come over to the website to book my time and to talk to me. And right now, if my calendar is busy and on the appointment page right here, when you click me, you will not see a lot of openings. So you just really have to look. And what I have, you see right now, I don't have any time open. Just don't book 25th. That's supposed to be a day that I don't work. Why do they make that available? And, you know, it's just 26, 27, 28. You click one of the day, you will see what I have available. Of course, right now, if you click 25th, I'm available. That's a Christmas day. So I shouldn't be working. These people are, the web designers are like slave drivers. Don't you agree with me? They just want me to work. But you can see on these ones, I really just have the evening couple of space available. And I do work in the evening, and you know, my kids are all grown up, and me, I don't really have any other hobbies than working. So I'm just, you know, available to you if you have questions. And other than that, the webinars we talk about here, they are all deposited in this channel. If you come over here, you're gonna see us. You're gonna see all of these webinars we have done. And you know, you can go to the live tab here. It will show you all the live ones. Live ones are the one different than this one. This one you're watching is actually broadcast via Zoom, via webinar. But when we do live, we do it on YouTube channel. So, you know, I'm really talking to you from the YouTube channel interface. So this is where kind of all deposited on the live. And, you know, if you go to home, you should see all of it. And we have more than 1,000 videos here for you folks. So it's a true library for knowledge. You can click the magnified glasses and then you type into the keyword. For example, you're just wondering, you know, say tips, tax tips. So you type tax tips, and of course we're not here teaching you how to pay more taxes. We were just talking about how to save it. The computer understand that. 9 tax tips for 2023, you see. So those are the things you're gonna find. You will see a lot of those, and just encourage you to come over here to see us. Now, let's go to our webinar that we prepared for you. And today's topic is important due days for the year end. You know, every year comes to year end. So during the year end, there's a lot of things to do. You're busy wrapping present, you're busy visiting relative, friend, but tax planning and prepare for your taxes, wrap up the year with knowing what to do, that actually is a life habit as well. I mean, as accountant, we kind of, our career just drive us nuts during the year end, right? Because we're so busy with wrapping up the year, not just for ourselves, it's for our clients. So it is a lot of work at the end of the year. If you ask me, and my busiest time in the whole year is actually right now, not because I have so many presents to wrap. I sort of really, you know, went away from that. The kids growing up, Santa is no longer attractive. So I just kind of give up in doing presents because nobody gets surprised, and they, even when they grow up, let me tell you, if your kids are still small, wait for this. So when Christmas come, they just send you a text. like, Mom, I want this. And that is it. So it's not like they have to behave for Santa to save them. No, that doesn't happen when your kids grow up. So, with that said, I am busy with real stuff, real work, and I want to tell you what are the important due dates because then you can prepare yourself as well, right? All right, let's see. And before we start, I always want to tell you about our book. And I wrote two books so far. And in 2019, I published the first book. This is Appointment with Ying at 8 a.m. That's starting up a business. Then I also, this year, I published this book called Appointment with Ying at 10 a.m. And this one is growing your business. This is really from your started up, have a 1 employee or 0.5 employee, how you grow that to be a sizable business. When I say sizable, I'm not talking about 100. I'm literally talking about 10, 20. So how you get over with this hump of 25 employees. And I'll tell you, 25 is a hurdle. 50 employee is another kind of hurdle. And each stage of your development, it really asks for different skills. So what I am writing is really about the skill sets that I see my clients are gaining so they excelled to the next level. And I also see ourselves, community CPA, coming through these hurdles and how we eventually move up to the 50, 40 employee stage. I'm not over 50 employees number yet. So that means the business is not at the level that we are shooting to be. It will still take some time. So our third book though, it is a accelerator for any company wanting to move themselves up quicker instead of organically grow. So that is called the 2 p.m. book. It is expanding your business, expanding it so fast, no longer sitting there trying to grow. It's just expanded with merger, acquisition, geographical expansion, and things like that, right? Then my last book I scheduled to write is the 6 p.m., which is retiring from your business. Of course, maybe I retitle that to be repurpose of your life instead of retiring because that word itself is expiring. And people don't use that word anymore because what do you mean by retiring? You are still, well, you're still healthy and you're still, very energetic. You don't want to retire and you want to use your energy for different purposes. So maybe it is not so much of retiring from your work, it's more of a repurpose for a bigger goal or something different, right? So right now on Amazon, you can buy 8 a.m. and 10 a.m. And by the way, all the money we receive from selling these books are donated to a nonprofit organization called Immigrant Entrepreneur Summit. We give that money to IES for IES to have the financial backing to help entrepreneurs to grow up, help entrepreneurs who speak English as a second language to be successful. Just like me, right? I speak Chinglish, but it's getting better and better each time, each year. So, my Chinglish is kind of not so bad for you to understand, right? But English is my second language. So with that said, and this slide is typical, and we always show it so that we push you to have you take responsibility of the knowledge you learn online. Now, 12 days left before December 31st, 2023. So what are the due dates? Number one, tax planning for 2023. If you don't do tax planning, obviously you don't have that timeline, but if you are going to plan your 2023 tax, you have to do the planning before the end of year because some of those tax saving tips and the method and the tools and they needed you to be in the year of 2023. So, if you have never experienced community CPAs tax planning, you should really give us a try, because we have such an easy, understandable ways to teach people how to look at their taxes. Literally when you finish a tax planning session with our team, and in your mind, you have a clear picture of what you are doing, why you are doing it, and what is your big picture for the year, and what is your key takeaway. So we give you a to-do to get that done before the end of the year. So it is a definitely, yes, you can kind of session to make your tax liability go down. And we don't do wrong things, and everything needs to go by the rules, by the book. However, there are opportunities for you to take before the end of the year to save taxes. Estimated tax payment for 2023, you better pay it before December 31st instead of moving that to 2024 to pay. Of course, you can pay that in 2024. That is also allowed, but it's more beneficial to get that out in 2023. So some folks will say that, oh, why, we need to do that. First of all, when you do owe taxes last year, and this year, you really should have done estimated tax. If you don't get that paid in timely, and then you will be paying penalty interest. And if 15% of penalty interest is looking pretty good for you, and I guess you don't need to worry, but otherwise, it is quite worthwhile to pay your bills before it come due, okay? And IRS has this interest always accompanied by penalty. So to waive the penalty is very difficult, folks. It's not as simple as picking up the call, talk to IRS, you're done. The difficulty is you picking up the call, wait for 3 hours, then the line got cut off, and you'll call again, wait for another 2 hours, got a person online, goes, no, you can't, I can't waive your penalty. You need to submit this, submit that. I mean, it's not that straightforward. Just don't even try to make your life more complicated. Just pay it before the end of December. And the property tax payment is another thing. If you already know and you have property tax to pay in March, and now you have your cash flow, just pay it right now. And that way, some of your entities, maybe you have an LLC that holding onto your property. If those LLCs are cash based, you don't pay it, you can't deduct it. So if you want to deduct more expenses, for example, you already paid the property taxes, but now you know March is coming, you already received the ticket, pay that in, then you can deduct more property tax, right? So speed up your expenses. That's one way to do. Before December 31st, folks, the bank has to run off that balance, right? If the bank did not take the money, you can't really deduct it if you are cash accounting. And if you are filing 1040, most of those 1040s on the Schedule E and the Schedule C, you are on cash base, so you need to see the bank balance to go off. And the medical insurance is the same. And you can concentrate all of your medical bills from 2022 in 2023, and from 2023 in 2023, and deduct that. Hopefully, you go over the limit, so that way you can deduct some out of your Schedule A. Payroll processing for December 2023 also should be done by December 31st, 2023. I know a lot of times when we run payroll, because December is over, so you run payroll in January, right? But good practice is always that you run your December payroll just a day or two early. So you do that on the 28th. So you get your December out, and then the expenses can come in to reduce your income. So make sure that you do that. And what else, folks? What else? And before December 31st, 2023, if you have done tax planning, you would be very purposeful in terms of how to manage your cash flow. So you may need to pay bills, you may need to purchase items, but whatever you do, if your accounting is on cash base, if you're reporting your tax, your profit to IRS via cash method accounting, then you want to make sure that all of these purchases or the bills you pay are already come out of your bank account. And if you are kind of in the hard spot and you're calling your people wanting to pay bills, but they don't answer you, and what you're gonna do, you write a check, you send to them, they don't deposit, then you still cannot deduct your expense. So in that case, I would recommend you just to go by money order. So that way, or cashier's check. So that way money is really out of your bank. So you can mail that to them. They can, they got it. So they can cash it anytime they want it. So those are the things before December 31st you need to look into. What about 2024, right? This is 2023. So what about 2024 due dates? Is there anything I need to know in January? So of course, there is January 16th and January 31st. Let's take a look what they are. On January the 16th, normally that due date is 15, right? And just because 15th is federal holiday, so it is become January 16, 2024. That is your final installment of 2023 estimated tax due date. What does that mean? Let's say if in 2022 you owe taxes and 2023 you made even more money than 2022, so you for sure owe more taxes. So in this case, you should have paid estimated tax. And instead of waiting until April when you file taxes and the government require you, in this case, you are required to make estimated tax payment. The last tax payment is on January the 16th for 2023. So you may recall that I was telling you to make it out on December 31st for estimated tax, right? So those are the people who hasn't really done estimated tax for the first quarter, second quarter, third quarter, and you're catching up at the end of the year, pay it all in before December. And then this one is the people who has been doing quarter one, quarter two, quarter three. So quarter three was due on October 15. So now come to quarter four. That is the due date for that. And of course, for special people, farmers and fishermen, we have a lot of farmers in Iowa, and we have some farmers in Minnesota, and really fishermen are more in California. So with our firm's location, right? So we have these kind of businesses, and they pay estimated taxes for 2023 on that day, just like everybody else. But if you don't pay the estimated tax by January the 16th for fishermen and the farmers, they have another time to do, and they must file their 2023 return and pay all the tax due by March 1st of 2024 to avoid the estimated tax penalty. So you may sit there wondering, okay, Ying, I don't know, what is the estimated tax penalty? And is that a big deal? Oh, yes, it is a big deal. So with the penalty and the interest, a lot of times it is arranged from 15% to 25%. And it's really based on the quarterly interest expense that the interest rate the IRS publishes. So when the feds have a higher interest rate, you obviously gonna have higher in IRS not gonna give you a low interest rate. Otherwise, they become a lender, right? So they want to be above the lender. So you don't want to borrow money from IRS. You want to borrow money from the bank. That's why their rate is high. And the interest is high and the penalty is hard to waive just because, and there's just, the government is short of money. Did you happen to know that, or you don't? If you don't, I'll tell you. If you can envision the government, Department of Treasury as a whole, and they're really struggling with their cash flow. So if they have a penalty they charge you, and you can trust me that to waive the penalty is a very rigorous process. The IRS don't want to waive that for you. They want you to pay because that's their revenue. Okay, January 31st. You need to file 2023 Form W-2. The end of the month. So the end of month, employees should be getting W-2s. Contractors should be getting 1099 and ECs. And other income like 1089 miscellaneous income, rent, and things like that, that should be provided at January 31st. Okay, and for employer, for our business, small business owners with payroll services, you have 940 due on that day. That is the annual federal unemployment tax return, FUTA. Okay, that is due for 2023. And then, of course, your 941 regular quarterly filing, that is also due at the end of January for 2023. The annual return for withheld federal income taxes, for 2023 is due on this date as well. That form is Form 945. That's an annual one. So you don't, it is sort of like 941, but 941 is quarterly. So the annual ones is 945. So that is due. Okay. Make sure you know these days, my dear. January the 16th, January the 31st. If you are accountant, you can bet those days, around those days, you'll be so crazy busy. That's just how it is. Now, February key deadlines. So the first quarter is January, February, March, right? So we got January covered for 2 days. And the February has 2 days as well. And the February 15th gave annual information statement to recipients of certain payment you made during 2023. A good example will be if you sold the property in 2023, and then you would issue a 1099-S and to but your attorney, the closing agent, will give you a 1099-S. So 1099-B are the interest and also the brokerage statement, remember? Those are coming out a little late. They don't come out in January because their due date is February the 15th. So now you sort of know, oh, why am I not getting 1099-B on time? They have a later due date. So just remember February the 15th, the day after Valentine's Day, and you're going to be dealing with some of those ones need to be submitted, okay? February the 28th, the end of February, you need to file forms 1099 miscellaneous with IRS if you're filing paper copies. Otherwise, the due date is April 1st. So have you seen people writing 1099 like forms? Yes. Okay, don't do that because you get audited really easy. And this is to say that at the end of February, if you're doing that form manually, and you need to file that right away on February, the due date is February the 28th. But if you file electronically, it's April 1st is the due date at the end of March. All right, so those are February due dates. What about March? March has a one big, huge due date. What is this? This is the pass-through entity due date if the pass-through entity year end is December. So like say if you have an S corporation, partnership company, and you are filing tax returns for them, that is due on March 15, right? And this is, I said that calendar year because there are entities are not calendar year, right? If you are seasonal, in fact, I was at a mall and purchasing a what do you call that, decanter, and it's for the right wine, and I was putting that together as a Christmas present for my husband. So I was talking to the store manager. The store manager said during November and December, their sales is take up 41% of their annual sales. So these kind of company, they should have a physical year end starting from November ends on October. So those are the companies should elect themselves to be fiscal year. So their due date is not March 15 because they're ending on October. So their due date is actually January 15. So that March 15 is relevant. It depends on when you cut off your business. So the S corporation can file different fiscal years, if you are able to elect that to be a seasonal business. And the place I go, for sure, it is a seasonal business, but I am almost certain their taxes is not done seasonally. And they're missing out a lot, because if you made so much money, then you right away report taxes. You are matching this income with the cost base from prior year, because from January to October you were purchasing things and they are all old price, so you ended up paying more taxes, folks. But if you match your sales to the stuff you purchase later, and the things that you haven't paid bill yet, then you can match to the income to expense. It's definitely an important tips that you should remember that, and when you come across a situation like that. And if the return isn't extended, then of course you need to file on that day. But if it is extended, it goes to 6 months later. So March 15th goes to September. And if you file extension, let's say if you end your year in October and January 15th is the due date, then you can file them on July 15th. So that's kind of how it works on the extension. So with that, we kind of conclude today's talk. And I hope that you got one or two tips from me, right? And I want you to never be empty-handed going off my webinar. And here and there, I would give you the knowledge that we have accumulated for, for 20 some years, to have a talk in 30 minutes and I concentrate on that knowledge for you. So you learn in bite pieces, but you learn, right? And here is the email of Catherine at communitycpa.com. She literally is the one deciding what to talk today on this moment. And she gets inquiries from our client. So we talk about things that our client need to know. At the same time, we also are very sensitive to the big environment, know that what need to be talked about in our webinar. And call 515-288-3188. We open 6 days a week, folks. 6 days a week means Monday to Saturday from 8:30 to 5:30. We are there waiting for you. So you just need to show up. I will talk to you again. Bye-bye.